Sure. Let's get started. Well, thank you everyone for coming here again today. This is our monthly just kind of macroeconomic overview of the world, strategic thinking in the economic space. It's important to us that you understand, of course, here at King, we do oil and gas investing and things like that. But I feel it's important that people understand what's really happening around them in the world, the issues that we're facing. The purpose of me doing these is to simply, be able to list out and give you factual information and allow you to think on your own. There's far too much media out there that is taking in the same information I am, creating a story behind it and selling you that story. And that is the last thing we want to do here. So before we begin, I want to preface by saying that the views and opinions in this episode are mine and mine alone. They are not the company's, though they let me do this. So that's a good thing. But again, I'm not our Lord and Savior, Jesus Christ. I am certainly not a futuristic person. I don't know what the future is going to hold. So I try to do these things because I run a podcast and I go through these topics all the time. And I feel it's very important that investors all around the world understand factually what's happening. And then I'll give you both sides of the coin. I see and hear everything in the marketplace. So I'll give you theories behind what I believe is happening or what some people believe and what other people believe, and allow you to make your own determination there. But we have so much to cover here. I try to do some updates. Last month, we talked a lot about gold and natural gas. Gold is now $40 or $50 from its all-time high. This trend will probably continue because of the issues we're seeing with the dollar. We're going to talk a lot about the dollar today, and the dollar itself it might as well be talking about Trump in 2020 or religion at a bar. There are just such divided points of view where it's definitely going to be this way, the dollar is going to reign forever, or it's dying tomorrow. I fit somewhere in the middle, just from a personal perspective. But it's important to understand what's happening in the dollar because it truly controls everything that we do in this society. So if we don't know what's going on with our currency and our government, it's pretty difficult for us to determine what to do that makes the most sense for our families. So thank you for joining us. I've got a hard stop here at about 6 o'clock, 54 minutes from now. Just for those of you who know, I do these things completely off the top of my head. So I have no set agenda for what we're going to talk about. I'm going to run through market information. I'm going to run through some scenarios I'm seeing in the world, and then we're going to talk a lot about CBDCs. But today I'm going to go through a presentation, which is a little bit unusual. I gave this presentation at Rice University last week and a couple other places online since then. So I figure if they wanted to see it, then I should share it with y'all as well. But there are many different things here. And before I get into the presentation and the slideshow, which is just a bunch of pictures, so it's nothing you have to read too much. I come from the tech space. We like little words, lots of pictures to illustrate our ideas. But probably the main thing to really focus on here today that no one's talking about, of course, we've seen Trump's arrest and all these other things. And we've seen massive amounts of tyranny being imposed in our life. But I think the thing no one's really covering at the moment right now is a leak that came from our government 2 days ago. So the Pentagon is talking about a leak. Unless you're online in the right networks, you probably haven't heard a thing about it. The leak that came out has been, how do I explain this and not get myself in trouble? It is 100% contradiction to the existing narrative being told to us. Numbers of soldiers dying in Ukraine versus Russia, the support that's happening around the world against the United States, and some of the other things that we've seen. Now, I haven't seen them all. I've only seen snippets of it. So I'll go through what I know. I don't talk about things that I don't understand ever. And I would advise you to do the same when you're speaking with other people. But it does play a big role in understanding some of the things that I've talked about in the past, especially with natural gas. We continually see these reports coming out from the government that our cache or our caches of oil and gas are robust. We have these huge inventory builds. It's not true. And now that we're seeing leaked classified documents from our own government that are contrary to their narrative, I hope that lends a little bit of understanding to the facts. I know it's difficult to grasp, but it's a hard thing it's called cognitive dissonance. It's hard to believe that the people you're supposed to trust, you can't trust. But that is unfortunately the reality that we find ourselves in here today. So, and here's how you get through it, is by understanding that it's happening and by taking stances in your life to be truthful and honest in all possible ways. and following the lessons taught to you I'm a Christian, so in the Bible, but whatever doctrine you believe in, follow in the best, be the best of the person you can be. That's what changes the world. So let's get into money. I'm going to do a quick screen share here and just walk you through just a basic state of affairs and where we are on things. Let me find this here in just a second. I don't know why it's not showing here. There we go. Okay. So I'll go from the beginning here. This is just a macroeconomic environment overview, why I believe alternatives are the new normal. So if we look back at the recent state of affairs, we had a pandemic. Let's call the pandemic what it was. That was a black swan event. A black swan event is a sudden emerging action or event that changes the course, especially financially, for everything in our direction. So I'm pretty sure we can classify the pandemic as one black swan event that we're facing right now. We're facing about a dozen as we speak. But the pandemic's a very clear, simple one to understand. So after the pandemic, during the pandemic and slightly after, we saw massive amounts of money being printed. This has created tremendous amounts of inflation and is now causing civil unrest around the world. That's just the facts. I'm not trying to be a doom and gloom person. I'm just truthful. Now, this all began with the shutdown of oil and gas. As Biden took office, they shut down about 25% of the production in this country. And since that time, oil production has been at the very source of all economic pain all around the world. That's why I'm here. That's why I work here. That's why I believe in what we're doing. We're supporting this. But when you shut down 25% of your nation's own energy supply, you usually do that by thinking, another nation will supply the energy needs that we have. Well, we saw how that turned out with a fist bump in the Middle East. Since that's happened, we saw Saudi Arabia drop their production by 2 million barrels a day, Russia by 2 million barrels a day. They've now accelerated that an additional 1.5 million barrels a day. But I'll tell you the truth, I don't know that the most recent OPEC plus reduction in oil is actually a reduction in production. I think it may be telling the truth. And the truth of the matter is that the largest reserves of oil and gas in the world are right here on this soil. But nonetheless, the horrible policies around energy have caused a tremendous amount of strife. We're seeing war brewing all over the world. Of course, we all know about Russia and Ukraine. What we're told is that Ukraine needs more money to win the war. What this most recent round of leaked documents from our own government have stated is that they don't believe Ukraine can win the war at all. So why spend money? And that about 4 times more Ukrainian soldiers have died than Russians. It's just in a leaked document from our government. So think of it what you will. It's not my opinion. I'm not trying to create an opinion, just facts. We're also seeing war brew between Iran and Syria. Our bases in Syria have been attacked multiple times in the past 3 weeks for proxy. We're starting to see the same things as counter proxy in Iran. We're seeing proxy wars build all across the entire world as we speak. Tensions are mounting everywhere. Most importantly, we've seen our 2 largest geopolitical enemies align with one another, with Putin and Xi. And they're not alone. These leaked documents are stating about 30 countries are helping support this. And we're starting to see U.S. troops get deployed. There are now U.S. troops in Kiev in a war that we don't believe we can win. Just some simple facts to understand. So that's the kinetic war. That's the bombs, tanks, guns, planes. That's not really the story. That's the distraction. The story is the economic war that's mounting around the world. If you don't believe that economic wars exist, you haven't been paying attention. We have now seen in the past few weeks, and I'm going to take a second on this slide because it's a great image. You see a tank, so you think war, but what else do you see? It's global. Like there's a globe behind it. This is not just the United States, Russia, and China. This is the entire world is facing tyrannical overthrow. And we're starting to see people revolting and revolutions occurring all around the world. Brazil, Argentina, South America is raging right now too. But in the middle of this is gold, commodities. They're at the very center of this. I believe we're approaching an era where paper assets won't be a thing. They shouldn't have been. If you look at the paper history of gold, every ounce of gold is traded about 1,000 times on paper. And we're approaching a time where banks are failing and they're going to start calling in their gold, and the repositories are going to quickly realize that they don't have enough inventory, and watch what happens to the price of gold and silver. But we are in a global economic war as we speak. And here's where it begins. If you don't know what that building is, that's the Federal Reserve in Washington, D.C. Excuse me. This is what they do there. They simply print money. They print money, they make loans of the money they printed, and then they collect your real sweat equity and assets to pay themselves back with interest. That is what the Federal Reserve actually is. Now, recently, they've printed so much money that about 48% of all dollars in circulation have been printed in the last 6 years. That's why we have such high inflation. That's why we have a mess with interest rates. And it's been, Congress holds the purse strings. So you can blame presidents all you want, but Congress holds the purse strings. But they've done nothing but print money since their very existence in the early 1900s. Now, this is a great slide to kind of put things in perspective. 100,000, million, billion, trillion. The word trillion is used right now like we use a napkin at McDonald's. How big is $1 trillion? Well, let's put it in perspective. If I were to count $1 a second, it would take me about 12 years at $1 a second to count $1 million. It would take me a couple decades to count $1 billion. It would take me 30,000 years to count $1 trillion. $1 billion is 1,000 million, and $1 trillion is 1,000 billion. We are giving away billions and we are printing trillions. As an investor, as an American, you should understand these things. And I will also preface this whole conversation by saying, I am not a Republican. I am not a Democrat. I am an American. And I'm talking to people in America. I don't care what side of the aisle you sit on, because there shouldn't be an aisle. There shouldn't be sides. There should be America and everyone else. And the people we have working in Washington, I hate to break the news to you, but there are two wings of the same bird, about 98% of them. So with all this money printing, by the way, the Federal Reserve, going back to the last slide, the Federal Reserve lends money and collects their interest payments at about 2%, and they borrow money at 4%. Now, if you took your entire life savings and you went to your spouse and said, hey, let's be a lending organization, let's lend it out and collect 2%, but we're going to borrow money from other people and pay 4%. It's not going to last long. We're at the end of sovereignty. There's about $1.2 trillion in unrealized losses in the Federal Reserve as we speak. There's also about $1.1 trillion in unrealized losses in major banks as we speak. Now, in the middle of this as we speak segment, maybe I'll make a segment next week called As We Speak. But right now we're in the middle of a debt ceiling battle. For those of you who don't know what that is the limit on the credit card. The way our country actually works is that Congress is essentially the salespeople for the people. They sell us on ideas, they vote on ideas, and then they borrow money that the Federal Reserve prints. And then they collect it through your taxes, and they pay back the Federal Reserve. So if you think that paying taxes goes to streets and roads and hospitals, guess again. It goes to pay back our national debt and our national interest. And right now, that debt ceiling has been met for about 2.5 months, meaning we cannot print money easily like we used to get out of problems. This happened in 2008. This has happened quite a bit. It's not the reaching a debt ceiling isn't the issue. It's resolving the debt issue. That's the issue. So when we have this debt ceiling being met, we're looking at about June until there's some sort of resolution, which seems right around the corner, but I promise you the next 2 months will seem like an eternity in economics, because that's just where we are. But when we have both parties arguing, one party wants more transparency and they want to raise the debt ceiling a moderate amount. The other party wants to eliminate the debt ceiling and print money into an oblivion. Neither one of those ideas are great. We should just be paying off our debt like we would as in our household. But right now in July, we are approaching a time where for the first time in our country's history, we may not be able to make our interest payment back to the Federal Reserve, which by itself is a really stupid plan to have a private bank financing your country. Just going to throw that out there. But when we approach this, how do they pay this debt ceiling off? Through taxes. So one thing you can kind of bank on and guarantee is that taxes are probably going to be going up because in June, 3 huge tax breaks that Trump put into place are actually going to be expired. So taxes are going to go up with or without Congress, but they'll probably go up even more. Now, if we look at today's news, today was a great day to kind of look through the markets and show you exactly what I've been talking about for months and years in some cases. If we look at where we're at right now with inflation, supposedly our inflation just dropped down to 5%, which sounds great because it was at 9.1%. But I'll reiterate this like I do every time. We haven't changed the way that we monitor inflation since the 70s. The world has changed, but the way that we calculate national inflation has not. If you go to the grocery store, if I had my phone near me, I'd pull this up. Go to the grocery store, you can see eggs are up 36%, bread's up 14%. These numbers don't correlate with 5%. And I want you to use your eyes and ears. If you have eyes to see and ears to hear, old saying, drive by a gas station. I'm in Texas. I am literally standing sitting on top of an ocean of oil, and it's $3.59 for a tank of gas, for a gallon of gas. 1 gallon, $3.59. That is up about $1 from last month. So I don't know how inflation went down, but the government tells us it did, so we should all just be happy. On top of this, we've also seen the largest interest rate rise since the late 70s, early 80s. We're now at about 5% on the Fed funds rate. If you're not familiar with how the economics work, inflation is basically a weakening of buying power of a currency. So our dollar has gotten weaker because inflation's up. Though they like to color it by saying things are getting more expensive, meaning they cost more dollars, which means that the dollar doesn't have as much value already. Now, in the midst of this, to strengthen this, that's called quantitative easing, is when they print money, they put more money into the world, and that dilutes the buying power of each dollar you have in your pocket. Then what they do to counteract this in modern monetary theory is they raise rates. So when you borrow money, you pay more interest. And that is called quantitative tightening. It's pulling the money out of the market. So we're in a very strange position right now with traditionally, I mean, you can look at the chart I have in front of you, traditionally high inflation, 5% is high inflation for the United States. It really is. And we're at 5% on the Fed funds rate. So we have high rates and high inflation. That puts the Fed in a position of what's called a rock and a hard place. And that rock and a hard place is getting harder and rockier every single day. So if we look at inflation dropping today, the target interest rate from the Fed is 2%, we're at 5%. So technically they still have to raise rates to get it down to 2%. However, we just saw two of the three largest crashes or bank runs in history just occurred: Silicon Valley Bank and Signature Bank. The interesting thing about these two banks is that they were very crypto friendly. So keep that in mind. This is going to be a very interesting 30-40 minutes for you. Keep crypto or digital currency in mind. Now, this rock and a hard place is, if I raise rates to lower inflation, I'm going to torch the entire market, because most companies borrow money for payroll and working capital, expansion, things like that. If that money becomes more expensive, you'll see more layoffs. You'll see a market get torched. If they lower interest rates, then you're going to see inflation go through the roof and the dollar weaken and things get more expensive. It's truly a rock and a hard place. And one thing that, as we look through this, I'm going to advise you to do is to consistently think about the things that are actually happening and what that means to you. First thing that's going to mean to you is that you're going to be paying more taxes because the debt ceiling is met. We can't borrow money. Interest rates are high and inflation is high, and the government is hiring IRS agents, theoretically. It also means that the power, the buying value of your dollar is losing value as we sit here. As we sit here, just today, the dollar dropped 69 cents, which doesn't sound like a lot, but when that continues on and on and on, it becomes quite a bit. So before we look into the markets and what that means, let's look into Americans and what that means. These numbers are about 35 days outdated. You'll see right now we're over 17 trillion in household debt. 1 trillion of that's in credit card debt. That's over 30% primarily. We have trillions in auto loans, 12 trillion in mortgage loans. America is leveraged to the teeth. Their dollar is worth less. Wage earnings are down and unemployment is rising. So what does that all mean to you as an investor? I'm assuming most of you, if not all of you, are accredited. What that means is if you're making investments and you're thinking about traditional investments, you have to understand where the money from traditional investments comes from. It comes from something called discretionary spending. That's what creates the stock market, the traditional stock, bonds, and cash, the traditional places that we run to for investments. And I don't think any three of these have much, short-term viability in my portfolio. You can do what you like with yours. But if you're looking at the stock market or the bond market, the stock market by itself is a big bulk of the stock market comes from discretionary spending, comes from consumers spending money they don't have by borrowing it from credit cards. That's where a lot of your retail money comes from. It comes from discretionary spending, which we don't have a lot of. And you look at the strength of corporations. Well, the average corporate bond right now is rated BBB. That's one step above junk, period. That's the average corporate bond, is just barely above junk. The dollar is under real threat right now. That's my opinion. There are certainly economists out there that are not equating who our true enemy is. Our enemy is not Russia. It is not China. Our enemy is who's in charge of our nation and the policies in our nation. The dollar is in trouble. The stock market charts are pretty easy to see if you're on here thinking about alternative investments. I'm sure this is nothing new to you, but you can overlay 1929, 1987, 1973, 2008, and today. You're going to find the exact same chart with a bull trap followed by a fall. That's exactly what you see. That's a chart. It's not an opinion. That's where mathematically things go. Now, all of the stuff in the stock market is predicated upon algorithmic trading. 91% of the entire stock market is traded via algorithm. So algorithms look for data to make decisions. The algorithms are kind of the beginning stages of artificial intelligence. And when we look at an algorithm, they're going to have certain nodes that they check, like a GDP report, which I'm not going to go through again. It's not an honest GDP report we're seeing, especially the last one before the election. Explain that. You can look 2 episodes ago and find my information. Or the most recent one on jobs, 517,000 new jobs in January. That actual number was around 110,000. So we're being told one thing and sold another. And it's time for us to stop depending on this information and start thinking for ourselves. I think that's a massive, massive point of view to look at. Let me go back to that. So I did talk about, we have no way of knowing how the price of natural gas is being manipulated, but part of the way it's manipulated is through trading, right? So if we have, I said this a couple of months ago, I don't really buy into the EIA's reports of these big inventory builds because they're not big inventory builds. Not my opinion, it's a fact. But at the same time, we're approaching probably a longer duration than we want in natural gas, because the futures are a little bit up, but then they tail off. And they probably tail off because this past week, Germany shut down their last 3 remaining nuclear power plants. So if they don't have nuclear power, they're going to need natural gas to power their homes and manufacturing centers. And they're probably going to be buying cheap natural gas from the United States that is sold to them at a very high premium. So we'll continue to see that stuff moving forward until the Freeport opens up in Louisiana, where we can actually export our own natural gas. And then that way we make the profits and not the government, but nobody knows when that'll launch. Now, we saw Silicon Valley Bank fall. We saw depositors get their money back, which I think is a big indicator that we're in socialism. In capitalism, banks fall and ramifications are felt. Giants are allowed to fall. We cannot bail out banks any longer, although there is a $2 trillion fund available for bank bailout still somehow, even after the Dodd-Frank Act. So bail-ins are the new option. This morning, Warren Buffett bet $1 million, which to him is like me betting $1. But he bet $1 million that if more banks will crash and depositors will have their money back. And I believe him. I just don't believe that it's out of the kindness of the government's heart. We'll go into that in a few slides down the road. So we've seen that. We've seen $47 billion in market value lost. We've seen Signature Bank fall. We watched Credit Suisse wipe out $17 billion in debt in 1 minute. They just wiped it out. So if you were a bond holder, I bought a Credit Suisse bond. This should be something that lasts me for 30, 35 years. I get interest payments forever. Well, you were wrong, because when they were purchased, they wiped out $17 billion in bonds immediately. So investors who had $17 billion in those bonds, they got nothing in return for it. This brings us to the BRICS Alliance, which I've talked about in I think the first 2 episodes of this for sure, because the American media is not paying attention to it. So the BRICS Alliance was formed in the early 2000s as a way of competing against the US dollar. In 2010, BRICS stands for Brazil, Russia, India, China, and South Africa. That was the beginnings of BRICS. There's about 35 nations that have now applied to join BRICS, including Canada, Argentina, Saudi Arabia, who's supposed to be using our dollar to transact all oil around the world. And it's creating a big ripple effect that honestly, no one's telling you how important this is. Even economists, they're just going to say, well, we'll just arbitrage that and we'll trade these things out. I'm just not buying it. And you can, that's your opinion. My personal life, I'm actually taking BRICS very seriously, seeing what they're doing around the world. What are they doing? First thing they've done is they've stockpiled gold for the last 5 years. Russia's been stockpiling gold for 18 years. You're talking about metric tons being transacted. 400 metric tons was purchased by central banks in the BRICS nations in the last 60 days. And this is twofold. So one coin is that Russia has already experimented by pegging precious metals to the ruble. It's not a full launch yet. It's not something they've completed, but they've experimented with it. The BRICS nations has stated, which no one takes seriously, they have stated that they want to create a competing currency that is backed by precious metals, primarily gold. That's one point of view. The other point of view is a bit more logical and to be honest with you, a bit more pertinent. For many years, many years, you can calculate it at least back to the 70s, probably since World War II. The US dollar has been the global reserve currency, which is great. It's a great thing to have as a nation, but have we used it properly? Well, until the last few years, sort of. Now we're just using it as a way of bullying people who don't believe what we believe, or who want to do things that go contrary to what our allies believe. We just sanction them. When you sanction someone, a nation, you remove their ability to use the US dollar. We sanctioned Iran for building nuclear weapons. And then for some reason, we pulled out everything except for $85 billion in military equipment from Afghanistan recently. Well, since that time, Iran has been selling their oil to Afghanistan, who's been selling it to Russia in the US dollar. Saudi Arabia has been buying sanctioned nation Russia. They've been buying their oil and selling it to Europe, so that the sanctions haven't really impacted the Russians in their sale of oil. This is not a theory. This has been published in multiple places. So gold is a great way of avoiding sanctions. So the fact that these nations are stockpiling gold, one side could say they're doing a gold-backed dollar, maybe. What it tells me is they're preparing for war, or they're preparing for contrarian views that may lead to war. I don't think it's any surprise to anyone that we are sort of on the verge of World War III over a nation like Ukraine, which is too corrupt to get into NATO. Put that in your head, keep that in your head. So the gold, I believe, is designed to avoid sanctions for coming war. That's probably where I'd lean closer to. I'd love to see a gold-backed currency. It's extremely hard to do. So in the past couple of weeks, we've seen the Chinese go to our biggest ally in the Middle East, Saudi Arabia, and broker a deal between the Sunnis and Shiites. These are two mortal enemies of thousands of years that have now created peace. And this is important to understand because in the 70s, we went to Saudi Arabia when the oil boom was really occurring in Saudi Arabia. And there's many books written about the structured deal. Let's just cut the crap. Saudi Arabia was in hostile territory. All the nations around Saudi Arabia don't like them, whether the Sunni or Shiite, doesn't really matter. But the mere fact that they have abundance in the Middle East because of oil makes them an instant enemy to their competitors. So in the 70s, we went in and said, hey, listen, nobody's going to mess with you. Our military has your back. Just use the dollar for all global sales of oil. And we'll call it a petrodollar, which is now effectively ended. This is another area that people are not taking seriously enough, in my opinion. Why does this matter? Well, in the past couple of weeks, China and Saudi Arabia have agreed to do petrochemical and petroleum deals in the Chinese yuan. Out of France. France just did $60 billion in a natural gas trade with China in the yuan. Macron, from the president of France, he actually just went to China for 6 hours and came back and said, we need to get away from the United States. We cannot be dependent upon them, especially if there's a conflict in Taiwan. These are things that honestly Americans should be very concerned about, especially if they have money. These are big, important things. So we already have about $100 billion that's been transacted, not in the US dollar, for the exchange of petroleum goods. It doesn't get more threatening to the US dollar than that, in my opinion. Every economist will tell you, don't worry, the dollar is going to be the global dominant currency for the rest of your lifetime. And they may be right. Again, I'm just a guy in an office. I'm not God. I don't know the future, but to me, I'm concerned about that. We also saw China structure a deal with Brazil to start doing all of their international trade in the Chinese yuan. And of course, on top of that, we saw the Sunnis and Shiites aligned through China. They've been brokering these deals. These are deals the United States traditionally does. Probably the most important thing to look at in this entire scenario, because people look at these deals and, oh, it's only $100 billion. Globally, it's not a lot of money. True. However, has it ever been done? No. So this is the first time they've breached their treaty or contract with us to keep that the US dollar is the global reserve currency, at least for oil and gas. That's now being broken. It means we're being disrespected, and there's been no repercussions for this. So that to me says a lot. Again, the enemy is not Russia or China. The enemy are the people who are doing nothing about the rest of the world using a different currency. It's time to start opening our eyes to that. So these big deals have occurred. Here's just a little snippet. South African minister says Saudi Arabia, the UAE, Egypt, Argentina, Mexico, Nigeria, and others. That others list goes on for about 26 more nations. They're not just trying to join BRICS. Well, I gave this exact presentation at Rice University in Houston. I said two things. I said, number one, you're going to see more nations come out publicly and say, we're not going to use the US dollar for trade. 2 hours later, 5 more nations publicly announced it. I also said they'll probably arrest Donald Trump as a distraction from all of this. And an hour and a half later, he was indicted. So not trying to be Rice-Stradamus or anything from it, but definitely interesting that it happened right after I said it in the speech. So we're starting to see this. So the big competing factor is the new global reserve currency going to be the yuan or the dollar? I'll throw out my opinion, which I don't do often, but my opinion is I think that ultimately the new global reserve currency is going to be a tokenized system using blockchain technology. That's what I believe. I believe the need for a global reserve currency with modern technology, blockchain, and tracking is probably irrelevant and outdated. So right now they'll stockpile gold to do old-fashioned gold trades internationally, but I believe that we're coming into a new era where international trade assets will be tokenized, transferred, and then denominated in their own regional currencies. Having a global reserve currency by law gives massive amounts of power. Through power in the wrong hands comes tyranny, and through tyranny comes rebellion. And we are looking at that very point in history. I don't believe the Chinese yuan has the strength behind it to become a global reserve currency. I don't believe that we do anymore either, but that's also up for debate. So what happens? What happens if the people on one side are correct and the US dollar is no longer the global reserve currency? It's a word called repatriation. So if they're not going to use our dollars as a store of value, which the dollar has been for a very long time, if they're not going to use that, they're going to repatriate or send currency back. This will cause further dilution of the dollar. It will cause further spiking of inflation, and it will cause further economic toil for this nation. That will mean that we will start seeing foreclosures and bankruptcies because interest rates are high, inflation is high, wages are down, and unemployment is up. This is just the ramifications. But at the end of the day, we're looking at something that's far more nefarious, far more scary, which is central bank digital currency. No one's talking about this either. You're definitely not going to see them talking about CBDCs on left-wing media, right-wing media sometimes. We should get rid of both of those. We should just have media that tells the truth. That would be very nice. But it's a luxury we don't have right now. So that's why you have me doing these things when I should be with my family, which I love to do. So let's look at a central bank digital currency. What is it? It would be a digital dollar. This is by far the most threatening proposition a government has ever given to the people of this country or around the world. Central bank digital currency sounds interesting. It sounds like, okay, well, we all use digital money anyway. It's just numbers on a bank account that we send to someone else digitally. The difference is that this would replace the dollar. All of your transactions would be digital. They would also be programmable. So if the government didn't like what you had to say, they could restrict you buying things within 5 miles of your home. If they thought these are hypothetical examples, but they're realistic in what they can do. If they thought you were overweight, they could restrict your ability to buy ice cream. That's how programmable central bank digital currencies are. And if you don't believe me, you can go ahead and look up the head of the BIS, the Bank of International Settlements, the CEO, the chairman, was caught on video 3 months ago saying, we have to get rid of money. We have to go to central bank digital currencies. We don't have enough control. Right now, someone could take a $100 bill and buy anything that they want. And that can't last long. So they want control. That's obvious. If you haven't heard these things before, I hope you're opening your mind and not just going, this guy's crazy, because these are real events that are happening. I document every one of them. But a central bank digital currency, how would you be able to impose upon a free nation that they should take tyrannical payment system? Well, they're starting it with what's called the FedNow program, or OP 1670, I talked about last time. The FedNow program is actually baked into law to begin in July. So in July, 140 banks and corporations are actually going to be sending your account information to intelligence agencies within the government to start tracking the way you spend your money. That's not a conspiracy theory. That's a fact. You can look up FedNow right now online, go on Google, and you'll find government-created propaganda that tells you how great a program FedNow is because you're allowed to transfer money in real time. Well, guess what? We can already do that. It's called Zelle, Venmo, PayPal. We already can transfer money in real time. We don't need another government interference with our money. The purpose is tracking and control. You can also look at the Restrict Act that they're putting out there right now. It's called the Ban TikTok Act is what its slang term is, but it's actually called the Restrict Act, which basically gives the government full control over free speech online, period. Do some research on these things. It's pretty scary stuff we're facing right now, especially for those who are unprepared. So again, how would a government be able to get a nation of free people to take this type of tyranny in order to buy bread? Well, and I hope I'm not getting too far off the reservation here, because I'm just a game theorist. I'm just a simple guy sitting in an office. But if I were an evil empire and I wanted to take control over free people, I would have to take away all their comforts. That's the first thing I would have to do. I would have to lower the buying power of their dollar. I would have to create high interest rates environments where they couldn't borrow. I would have to create ramifications of the fallout of a dollar. So let's go back to repatriation. Say we see many nations around the world not just talking about it, but actually stop using the dollar and start shipping it back here. We're going to see a loss in value. I don't believe the dollar will ever collapse, just for any of you thinking I'm crazy. I do think it'll be removed as the global reserve currency. That's a bold statement, but it's what I see. You don't have to buy it. I'm not asking you to buy into it. It's just my personal opinion. I believe we'll go to a digital blockchain model for that. Ultimately, it's not a bad thing for the US. It's not a bad thing for anywhere. It's a good thing that people can use their own currency to buy their own things. But let's just look at an example. Let's be hypothetical. If the dollar lost 20% of its value, you would lose 20% of your buying power in an environment where, if they lower rates, inflation is definitely going to go higher. So things will cost more, and you'll need more money to buy the things you simply need. But more importantly, if the dollar loses its value, you're going to see corporations losing buying power. Those corporations employ people. You will see employment go up significantly. After that, you will see bankruptcies, you will see foreclosures. These are opportunities for people. That's why I'm talking about it in this conversation. There are opportunities potentially in the future. But then you would also see crime skyrocket for a period. And crime would skyrocket because people wouldn't have enough money, period. Their dollar doesn't have any value and things cost more. At that point in time, it would be the perfect time to introduce a CBDC. Hey, I know the dollar's not doing great, but we have this new dollar, it's digital. And if you just sign here and press hard, we'll make sure that you have money in your account tomorrow morning and everything will be fine. I see this situation moving forward. I do. Any logical game theorist who's watching what happens geopolitically can see this coming. So what does that mean to us? Number one, it means that we need to start paying attention to things a little bit more, watching how we spend our money, and we need to focus in on commodities. You are looking at an environment where today, just for today, we dropped a full percentage point in inflation. We went from 6% to 5%. Just today. Today is April 12th, 2023. Just today we saw that. Now, normally when inflation drops and it becomes deflationary, you see the stock market really jump up. The stock market closed down. Normally, when you see inflation drop, you see precious metals drop. Precious metals all went up. Again, gold is near an all-time high. Silver is near a one-year high at this point in time. We're looking at a time that doesn't make any sense. When inflation drops, you should see the market boom and metals drop. We saw the market drop and metals go up, not boom. They've been booming for about 2 weeks. Gold is usually about 2 weeks ahead of market trends, by the way. You watch gold and you can find out what's happening in the world pretty easily. But we need to look into things that we touch, hold, and feel as the most important things. That's why you're going to find agriculture, great investment. Oil and gas, obviously great investment. Precious metals, copper, silver, palladium, platinum. All these things have intrinsic value that have held and stored themselves for thousands of years. What hasn't lasted thousands of years is fiat currency. Fiat currency, which is what we don't even have a petrodollar anymore if Saudi Arabia has already agreed to sell their products in other denominations or other currencies. We do not have even a petrodollar anymore. We have a pure fiat currency. So where do we look with our money? We look to gold, silver, agriculture, raw land, oil and gas, things that people need that you can touch, feel, and sell for a premium. These are important. Not just because I work here because of the market. I believe that oil and gas is one of the best investments you can make in this period in time. Point blank. I've said for a long time, gold, silver, oil and gas, raw land, and crypto. I personally believe Bitcoin is the one that'll make it. There's a million other opinions out there, and man, do people love to destroy you online for having your own opinion. But I'm by no means a cryptocurrency expert. I believe more in gold and silver than I believe in anything that's made up digitally, because I can touch it and I can feel it. So getting into this type of environment, we've got to keep our nose to the grindstone to really watch what's happening. I think that this leak we just saw from the Pentagon is probably the most telling story in United States history. When we're being sold a war that Ukrainians are killing them and they're such great fighters, and we're going to win this war and we're going to do whatever it takes to win the war. We're going to fund it forever. They're just stealing from us. They know the war is going to be lost by Ukraine. It's already happening. These aren't I've been saying this for 6 months because information I get in the world, but now it's verified from leaked classified documents. When that stuff is happening, all these things create a real bad situation for a local currency like ours, which is a global currency. When we look at the other nations around the world that are truly speaking out against the power of the global reserve currency as a whole, we need to take that seriously as investors, as people, more importantly, because our children's future is what's at stake. So what I want to do from here is I want to go ahead and open it up for Q&A. It's about all I have for you, right? I'm not going to get into too much political stuff. Our politics are a mess. It's difficult to believe people that enter Congress, normal people supposedly that are elected that leave worth tens of millions of dollars. It's kind of hard to believe, but that's the truth. So I won't get into too much political stuff, just sticking to finances, money, and primarily commodities, alternative investments. Now, just the fact that they've been labeled alternative investments should tell you exactly what you need to know about the modern era that we find ourselves in. So for the next 15 minutes or so, if you've got a question, go ahead and raise your hand or type it in the Q&A. I'll be more than happy to talk to you. I see Brent. Let me get you guys on here. I do this online about 4 days a week, so more than willing to. Let's get Brett up here first. I'll get Dale right after you. Go ahead, Brett.
Hey, nice to meet you. It's my first time on here. You're talking my language, man. I talk to people all day about this stuff. With the commodities and stuff like that, I'm in a couple groups and they're talking about buying commodities, but they're talking about doing it through the stock exchange and going on pink sheets, and doing crap like that. I wonder if you got a better plan, because I'm like, I don't want to hold the precious metal like my house. I'm not going to have a couple bars of palladium, like platinum all sitting around in a closet in a safe. So I'm looking at where would you put that? What are you doing? Like, you have an idea of how you're doing it to kind of keep buy these hard metals. I mean, the other types of commodities, I guess you're just going to have to buy it on an exchange of some sort. But what are you doing? Like, do you have a plan for that?
Yeah. So on the commodity side of things, there's repositories all over the country. So there are private vaults. There are private companies that'll use retinal scanners and things like that for you to be able to store your metals that are guarded with armed guards full time, that are truly almost impossible to break into. So you keep a little bit in your house, but there's these regional repositories are a great place to store precious metals, because they are fully insured and guarded nonstop. They're almost impossible for someone to break into. Even if they had, if they stormed it with weapons, there still are multiple layers of protection. So you should certainly have some in the house. I wouldn't keep a lot in there, but if currencies do what currencies do, this one will do what it does. And you certainly don't want to be reliant upon digital things in the future, because as time goes on, I have real concerns about the power grid and about the internet. So holding digital, when you look at you guys are probably talking about buying commodities either through like mining stocks or the VIX commodities index.
Exactly. Yeah. Mm-hmm.
The VIX isn't a bad idea. I'm considering that. I'm completely out of the stock market. The mining stocks are great, but I just don't trust anything commodities driven that has a paper behind it, because I understand the gold and silver markets and how they work. I'm not joking when I say for every ounce of gold, it's sold 1,000 times. And we're approaching these. It's not just Silicon Valley Bank and Signature Bank. There's 340 banks that are on an insolvency checklist right now. So we certainly didn't see the end. We saw the beginning. As more banks collapse, they're going to have debts. And when they have to pay off those debts, they're going to start calling in their precious metals to make these transactions. And eventually what they're going to find out is, on the paper market, just an example, say the paper market says there's 1 million ounces of gold in the world that we're trading. They're going to find out there's about 2,000 ounces in the actual repository. And that's going to cause a bigger ripple effect. There's a severe shortage in the market. I buy gold and silver all the time, and you used to be able to buy it same day on the spot. Now you have to make orders and you have to wait for it to be delivered. So precious metals are flying off the market right now. Oil's over $83 again. I expect oil to be 120, 130 by the end of the year. It's a good place to put your money. But when you're looking at the VIX, I think it's a good trade. It's a contrarian trade. So instead of buying Facebook or some of these other tech stocks that really don't have the revenue to back their value, the VIX is a commodities index. So it blends together multiple different commodities for one central value. And I think there's some trading money to be made there. I personally won't do it because I'm just done with the paper markets. But look into local private vaults or repositories. There are places all over the world that store gold and silver for people. If you have a small amount, I wouldn't be worried about it. If you have a big amount, like $1 million or something that you want to put towards it, these private vaults and repositories are great solutions. Does that help you, Brett?
It does. I appreciate that greatly. I'm just keeping like coins and like small little pants in my house right now, but I would like to move.
Don't tell anyone out on the internet. You don't have any. You lost it all in the fishing accident.
Coins. I mean, like quarters and nickels. That's what I mean. Quarters and nickels. But yeah, in the future, I'd like to look at something more secure. And I just was always kind of curious if I had to go to like the Caymans or something like that. I was like, I don't know if I trust having to get out of the country to get something I own. So
No,
like,
you want it to be
it.
close. The whole purpose is you may need, buying gold and silver is just a way of storing value to get more cash.
Right.
I in my podcast, I talk about this all the time. People always say like, well, what am I going to do? Buy bread with gold? No, you're going to hold on to gold. If the dollar loses value, the gold increases in value. So you cash it in for more cash than you had in the beginning and you buy some bread. So definitely keep it close. They've been building these private vaults and repositories for about 12 years all around the nation. Unfortunately, I will say in full honesty, the FBI raided the one in Los Angeles with no cause. They just opened and took everything that was there. I'm sure there were people doing bad things there, storing dirty money. I'm sure of that. But there were also good people just trying to keep their gold and silver out of their house. Gold and silver in your house in a repository is not going to be safe if the government confiscates, and they've done this 3 times in our history. Unfortunately for them, there's about 438 million firearms in our hands. It'll be much harder to confiscate gold than it was in the past. Nor do I think we'll get to that point, but look into the local repositories and local private vaults. Okay, Brett?
Thank you so much for your answers.
Thank you. You got it. You got it. Let's go to Dale. Can you hear me, Dale? Dale? Hold on. There we go. It's our first time taking live callers here. Generally, we just take them in the Q&A box. I got you on here, Dale. You should be able to talk. But if not, I'm going to go to Stephen. Stephen Westerberg. How are you, sir? Can you hear me? All right.
Can you hear me now?
There we go. Hey, Stephen, how are you?
Okay, there we go. Well, I really appreciate your time, and it's very interesting. I'm right in there with you on all of this stuff. It's a scary time. You mentioned during the middle part of your talk, the Tax Cuts and Jobs Act is going to expire in June, did you say?
Yeah, it's either June or July. I think it's
okay.
like June 30th.
I was under the impression that it was not going to expire until the end of the year. No. So if it expires in June, let's say, does that mean if we want to take advantage of it again this year, we've got to have the investment in there by June?
Oh, for oil and gas? No, there's no. Our tax break is good. We're in the IRS code. These are Trump era tax breaks. These are taxes that Trump eliminated that expire in June.
Oh, it doesn't have anything to do with the oil and
no
funds and all that. Okay.
No, they're trying though, Stephen. They are trying to.
Well, but I thought those were going to expire at some point.
No, there's a 5-year schedule for them to reduce them from 100% reduction down to 60. Okay. And then after that, nothing. But I can't see that going through unless we find ourselves in full communism, which will be gone in a heartbeat. You won't be able to invest in oil and gas in a truly fascist or communist state. They just don't allow it.
I must have just heard this Tax Cuts and Jobs Act expiring this year. So
no. Very good. No, these are Trump era tax breaks that expire in June.
special ones. Okay.
Yes,
Oh, okay. Thank you. Appreciate it.
you got it. You got it. Thank you, Stephen. All right, and I got a couple questions here in Q&A. What are the odds that OPEC Plus continues cutting down their production if the current global economy plunges with the oil price? So thank you for asking that question, Andre. This is something I forgot to cover that I was going to go through. So I don't believe that, and I'll give full credit to John for this. He brought it up. I don't think the most recent round of cuts are actually production cuts. I think they are a way of covering for their lack of reserves. The interesting thing about this is I've been saying this for about 10 years. The largest, and science, because I got it from science, is the fact that science tells us that the largest oil reserves in the world are between Texas and Alaska. And we've been told since we were children, 46, so for at least 45 years, I've been told that all the oil's in the Middle East and we have to buy it from there because that's the only place that it is. That's not true. Actually, right before the election in 2016, the Communist News Network, otherwise known as CNN, they actually put out an article on their website that stated that the largest reserves in the world for oil and gas are in the United States. And then they immediately stopped talking about it and went back to the fact that, I hear every week that the Permian Basin's being run dry. It's not. There's enough oil between Texas and Alaska to power every vehicle on Earth, every building, every home for about 600 years, which is why they shut down federal drilling land leases in Alaska as soon as he got into office. So, the OPEC Plus, I actually don't think they're reducing. I think they're just covering up for their own lack of reserves. But yes, I do anticipate not just OPEC Plus, but nations around the world to start. It's the best way to do it. If you have a petrodollar and there's no petrol, then there's no dollar. And like I'm telling you, based on classified leaked information from the Pentagon that just came out a couple days ago, there are 30 or 40 countries around the world that are supporting our enemies in this effort, and they're publicly stating they don't want to use it. So yeah, I do expect to see oil cuts everywhere around the world except for in this country. We've been known as a swing producer for a long time, but if we had our handcuffs off and some decent funding from the government, not just from private citizens, 68% of the oil and gas industry is funded by private citizens. That doesn't happen anywhere else. If we had real funding, the United States would be the major player in oil and gas. We're starting to see that emerge, with a natural gas export facility being built in Louisiana. That's a big step in the right direction. So yes, Andre, I do expect to see further announced cuts, whether they're actual cuts or not. I hope that helps. We have anonymous attendee, the anonymous person. What else would you invest in? Number one, I cannot give you financial advice individually over the internet, nor would I. I would say to stick to commodities, to things that you can touch and feel. Those are going to be the most valuable commodities on Earth. Very soon, they're already marching in that direction. I would also probably look into some old pieces of land. Like raw land has such a good value to it. We always talk about houses and buildings. Raw land. God only made so much land. Man can build a building anytime they want. So I look into more biblical values when it comes to investing right now. And I'd seriously look into finding raw land and developing it in the future. There's a big upside for that kind of stuff. And, the trends that we're seeing in the destruction of food plants, trains being derailed, chemical spills in our water sources, that could be a very valuable investment moving forward. Carl, can you talk a little bit about silver and where we are compared to gold? Great question. Bob, you're correct. Raw land is not income producing. You are correct. So that's why my allocation, I would use my income production coming from gold and silver trading and oil and gas revenues. Raw land is a long-term play with very little tax benefits and no income until you develop it. But someone asked me where I'd invest. That's where I'd invest. A little bit about silver and where we are compared to gold. Great question. So traditionally, for literally thousands of years, there's been a basic ratio of gold to silver. Depending on what era you research, it's usually 12 to 35 ounces of gold should have the same value, or ounces of silver should have the same value as 1 ounce of gold. Right now, that ratio is 92 to 1. So 92 ounces of gold of silver have the same value as 1 ounce of gold. So the bigger upside in the metal market is certainly silver. if you negate platinum. I think platinum has a huge upside because of its new industrial purposes with 5G and wireless. But if we look at just talking about silver and where it sits, personally, I take that ratio being long and biblical. 35 ounces of silver should equal 1 ounce of gold. Right now we're at 92. So while you're buying gold, I'd certainly buy silver. Gold, I think, has a big upside still. I think the 2000 number, 1950, is probably the new bottom where we're sitting. So the upside is there. But silver runs faster. It trails gold in its upside, but it surpasses it in just percentage of yield. So make sure you have a mix of gold and silver. And if you can find platinum, palladium, all those other great metals, I would do that as well. Great question, Carl. Does that answer your question, Carl? I hope. It's much easier talking to you all, but I don't know how to operate it on this platform. This is for my mom, who is on the call. Her name is Paula. Hi, Paula Story. How are you? What about real estate multifamily apartments? I get this question a lot. Now, multifamily is considered commercial. It's considered that way for tax purposes, zoning, just about everything else, but it's a little different. Commercial real estate is about to take a gigantic dump. And everyone in the world knows this. I think the phrase that I heard the other day was, don't try to catch the knife when it's falling, the dagger when it's falling, you'll cut yourself, wait till it hits the ground and pick it up. I would not be buying commercial property. I am not buying commercial property or multifamilies at this point, unless they're in good regions. So multifamilies, you make your profit off rent. As long as you're in a good neighborhood or a good location where the rents can be higher than the cost of borrowing the money to build or own the facility, you're in good shape. Now, again, the multifamily investment kind of relates back to interest rates. So in multifamily deals, we deal with a lot of multifamily partners. We love the multifamily business, but I don't think anyone would disagree with me on the fact that interest rates create vulnerability in multifamily environments. Unless you have a locked rate or purchased all in cash, with interest rates moving up and adjusting, it becomes very difficult to profit. Many multifamily deals right now are not paying rent because they're covering the cost of the money. So while we find ourselves in that type of environment, I think we're in a good holding pattern looking for alternative assets. But I think the biggest opportunity you may ever see for multifamily and commercial is about 2.5, 3 years down the road. And I think at that point in time, there won't be a wiser place to go. But then again, a trillion variables could come into play and that could be completely wrong. But at this moment in time, if it's the right deal in the right location and the finances are structured right, there's never a bad time for a multifamily investment. But if it's the wrong deal at the wrong time in the wrong place, then it's going to go really wrong. So that's kind of my opinion. I'm not an expert in that field. It's just simply my opinion. So thank you, Paula Story. And I think that came from Bob. Is that right? Oh, no, sorry. That question was the silver and gold question was for Paula. My apologies. Bob, that was your question on Bob Perrell on multifamilies. Suvi, in the situation that the dollar falls in value and we want to sell gold and silver, is overseas where we would sell it? Could be, but gold and silver has always been regional. By definition, gold and silver follows the definition of money. There's limited amounts of it. It's portable, it's fractionable, has a lot of things like that. So overseas isn't where you'd sell it. The general theory is you hold on to some gold and silver. When you need money, you go sell it to a gold and silver broker, you get some cash and you buy things. This practice has been going on since, Jesus walked the earth. So I don't think you necessarily need to go overseas with it, because if the dollar falls, it declines and the price of gold goes up, you're still going to need X amount of dollars to buy something. The dollar is not going anywhere. I believe it's being challenged on a global scale as a reserve currency, but we're going to have dollars for the rest of our days. It's just a matter of how powerful and what they're worth. So moving forward, I don't think you need to sell anything overseas, nor do I think it's cost effective to do so. Shipping metal is extremely expensive, and that'll eat into your profits. So you're going to want to stay local with these things. Buy it from a local bonded broker. Somebody who has a license that will actually test the metal in front of you, so you're not buying gold-plated tungsten or silver-plated tungsten for that matter. But make sure you have it somewhere near you in a local repository or a private vault. And if you need cash, you go to your vault, you go to your repository, you pull it out, you sell it, you go buy things. We don't need to go overseas though. I don't think we're anywhere near that type of economic decline. But we are certainly in something. If there are any more questions, I'll be happy to take them. Sorry, guys, busy week. But I think it's important to note that to keep your eyes on, how do I say this delicately? Whatever the general media is pushing your way, you're probably better off going the opposite direction. I have colleagues of mine that have made a fortune in the last 6 months doing the exact opposite of what it says on Market Watch. We kind of live in an upside down clown world at this point in time. Eventually we'll find ourselves back in a great place, but right now is a very challenging time with mounting wars, currency wars, deflationary period, probably approaching a high interest rates in a deflationary period, never seen before, but never really on a large scale like this. Unprecedented times are certainly ahead. I think the great thing is, talking to some of you is kind of like, wow, you think the same way I do. Guess what? 85% of our country thinks the same way I do. Only about 5% of them have the courage to speak this way. So be bold, be honest. It's okay to be wrong, but think for yourself. Take the information I gave you. Don't listen to my opinions. They don't matter. I'm just a guy sitting in an office in Texas. What matters to you is taking in factual information about what's happening in the world, understanding how things work, and then assessing what's happening with the way things work to try to determine what the next step is moving forward. And there's never just one step. So use some game theory behind it. With every situation you find yourself in, you're going to have 4, 5, 10, 200 different possibilities, and then start putting a weighted average on them, which ones you think are most logical or least logical, and that'll help you determine where you need to go. A couple more questions here. Where are you buying copper? I'm not buying copper. Personally, copper has a huge upside, by the way. Most silver mines are shut down. With silver prices low, there's not a lot of profit. A lot of gold mines around the world have been shut down. A lot of the copper mines have been shut down. There's a big run up in copper and then a big drop. So there's not a lot of copper mining going on, and you can't make anything electronic without copper or silver at this stage of the game. I don't buy copper because I can't find a good place to put it. Copper is priced by the pound, not the ounce. So by trying to make, I don't know, even $20,000 in a copper trade, you're going to need pounds and pounds and pounds of copper. So I don't buy any copper. I don't buy it on paper, but it's certainly something you could look at. But that's just limited on my resources. I don't have a good place to store it. If I did have a place to store copper, I probably would buy quite a bit because there's a huge upside based on the demand of electronics moving forward. Where's the best place to buy gold and silver? I could tell you if you were in Dallas, and I'd tell you one-on-one. I have about 4 different places that I go that I've been going to for a long time now, and that I trust, and everything I've gotten from them is tested right in front of me. And they have good prices. But in general, the best place to look, there's some good online places, guys, but the problem with online is you're kind of limited on whether you can use your debit card. If you want to make purchase, you've got to put your banking information in online. I just don't do that. I buy all mine in person. You can buy them through intermediaries and brokers of the actual repositories. I do that quite a bit. So I can just send them a wire for purchases. They send me images and store it for me in a safe, secure location. That's certainly something to do. But if you're looking locally, sometimes jewelers sell gold and silver, rarely, but sometimes they do. The places that have "We Buy Gold" signs, they buy and they probably sell gold depending on who runs it. Most of them sell gold. There's premiums involved, so don't think that you're going to buy an ounce of gold for $2,025. It's going to be at least $100 premium per ounce on it. Understand that. And at the same time, look for bonded places that are licensed bonded brokers. So if they sell you some crap, then you have some recourse from it. But make sure you have bonded places that have been around for a while. One of the things that you're going to start seeing very soon is you're going to see a lot of pop-up gold and silver places. I've contemplated doing it. I won't do it because I don't have time, number one, or the resources to buy enough inventory, nor is there enough inventory to buy. So I'd look for gold and silver brokers who are state bonded, who have insurance, and who've been around for at least 5-10 years with a good track record and good reviews. That's one thing that I'd look at. So good question, Mark. Last 2. I noticed that the yield curve is inverted, and some experts are saying that it might indicate an upcoming recession. I was just wondering, in past recessions, how did investments in oil and gas production perform? Do you have any insight on that? I do. So number one, let me educate you as to how inflation and recessions are determined. Inflation hasn't changed since the 70s. So the inflationary number they give you is not accurate to the modern world. It's just one that they can manage. True inflation is probably closer to 18% than it is to 5%. That's one side. A recession. We are in a recession. From every statistical analysis you will find. I don't buy the last GDP report, because if you remove liquid natural gas sales overseas, weapons, sales to NATO nations, and selling our own strategic petroleum reserve, which is probably the most dangerous thing that our government's ever done as they're approaching a world war scenario. If you remove those three, our economy shrank again by a lot. So I don't have any hesitation in saying that we are in a recession. Our fear should be of a depression. Yield curve have nothing to do with determining whether or not we're in a recession. There's a 9-person panel, an organization on the East Coast that has 9 unelected people who our government relies on to tell us whether or not we're in a recession. We were in a recession clearly after 2 downturns in GDP growth. That by definition is a recession. And instead of admitting we were in a recession, our administration changed the definition of recession. So if that answers your question, how do oil and gas do in traditional recessions? They decline over time. I will tell you that the point in history that we are in, we have never seen before. We have never seen a global recession of this caliber. We have never seen banks dropping off like flies. We haven't seen Japan move rates in 2 decades. They're moving rates. We have not seen other nations turning against the global reserve currency. We have never seen, in my lifetime, there's never been oil or gas bought or sold, not in the US dollar. We're seeing that. And we've also never seen anyone in a recession cutting production. So during this recession, I believe we'll see the prices go up when traditionally they go down. And that makes a lot of sense in our world today. I tell people all the time, we live in an alternate universe where alternate investments are the new norm. We do live in an alternate universe. Boys can be girls today, just out of nowhere, just because they want to be. We have horrible decisions being made. What's right is wrong. What's up is down, left is right. These are obvious things for anyone paying attention. So great question, anonymous attendee. Traditionally in recessions, oil and gas investments, they weather and they decline. We're not seeing that trend. We are in a recession, and we've seen the decline to $67, $66 a barrel. And our government didn't pull the trigger to refill the SPR. Not having an SPR available and having declines in production by other nations around the world has never been seen before in a recession. Voluntary drops in production, not based on reserves. Do I have any insight on that? I guess that's my insight on that. So I hope that helps answer your question. So AppMex is out then. I'm so glad I got on this call. The internet places like AppMex who sell online, JM Bullion, Money Metals are not bad places. I just personally don't want the government in my business. I don't want to put my checking account information online to buy from someone I don't know. It's just my personal choice that I'd rather buy from a local broker for gold and silver. So gold, silver, raw land, oil and gas, and some form of digital currency that you have done research on and believe in. I think that's probably the best route to go moving forward. That is the end of all of our questions. I'm going to be late for my church group here at 6:30 or 6:45. I live a half an hour away, but I wouldn't trade it for the world. Thank you so much, everybody, for your time. Thank you for coming. Thank you for the great questions. And I look forward to seeing you again next month. God bless you all.